In this video we're going to be discussing, can the UK economy be unfucked, and if so, how? Wind the clocks back, in the UK was home to the Industrial Revolution, which kicked off one of the largest expansions in global economic output in history. It started with the textile mills and moved to the railways and then to financial services and the internet, and is still one of the largest economies in the world. But since the financial crisis, it's really struggled to keep pace with other comparable OECD or G7 countries. And the near-term outlook doesn't look great. The UK has had its growth forecast slashed twice, from 1.8% and 2.5% in 2024 and 2025 to 0.7% and 1.4%. But this marks a growing trend in the UK where it's just down, 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 down. And just quickly, as with the last video, ideological imbeciles will say that this is a political video. It's absolutely not. It's an objective look at quantitative and provable facts as to why the UK economy is struggling. The first is fiscal policy. The IFS released a study in 2022 where they really advocated that the UK should be spending more on green energy and the move over to sustainable transportation. And one of the things we talked about in a lot of detail in the last video is that UK productivity has really struggled, and the benefit of spending on things like transportation is it's got a twofold benefit. The first is, in the immediate, it gives people jobs, people to lay the track, people to lay cabling, electricians, plumbers, but then over the longer term you're also increasing the productive capacity of the economy. If you're building better roads, if you're laying fibre optic cable for broadband up and down the country, that is something which will boost productivity overall. And a report in 2023 from the Resolution Foundation, giving people on lower incomes a greater boost as they've been hit hardest by the cost of living crisis over the last couple of years, will basically mean that you're raising the floor, which a lot of people seem to be falling under. A shocking number of children and adults are growing up in poverty in the UK, and so by raising this bar, it means that those people have more spending power and more money in their pockets. And as we talked about in the previous video, people on lower incomes are more likely to spend a greater proportion of their income. Productivity and skills. The National Institute for Economic and Social Research did this study earlier on in the year, and they basically advocated for the government spending way more money when it comes to boosting overall productivity. And this, ultimately, they decided was through two key areas. The first was in education and the second was in skills. As we mentioned, the UK's tumbled down leaderboards when it comes to literacy and numeracy. Part of this can be attributable to COVID, but it represents a much broader trend where the UK has seen its academic attainment really fall over the last 10 to 20 years. And by investing in kids' education, this is really one of the best things that a government can be spending money on. Some studies have put the payoff between 7 and 12 times. The problem invariably that you run into is that that's a political decision where they're talking about spending large sums of money where they won't see a return for potentially decades down the line. And the increase in training is really to try and fill a lot of the skills gaps. One of the instances, or one of the problems that we've run into post-Brexit, is that we've seen this brain drain where lots of skills that had been highly paid, lots of those workers have gone back to other countries in Europe. So by investing in those skills, the economy will benefit because those skills will not be at a premium. And a report from the IFS in 2022 found that the UK could really help boost its entrepreneurship and productivity by making it easier to start a business. Historically, this sort of thing has been done through tax credits and tax breaks for particular industries, the green revolution or green energy, or into AI and machine learning. And this is the sort of thing that they're doing a lot in the US and even more so in China. They're just throwing vast sums of money at the industries which their governments will think will really be the next industries which will ultimately support growth for the longer term. Diversifying trade partnerships. Now, I don't want to go into this too much, but one of the grand promises made to us during the Brexit debate, again, this is not necessarily a political point, but one of the promises made was that there would be a plethora of deals, that people would be tripping over themselves to make trade deals with the UK. But the truth of the matter is that countries will always trade typically with those that are closest to them. Now, that's largely because the cost of transporting goods is basically a per mile cost. It is more expensive to post something to the other side of the world than it is to post something just down the road. And this plays out in real time. The US's biggest trading partners are Canada and Mexico. The UK's biggest trading partners were the EU and North America. Distance makes things more expensive. One thing that was discussed I don't think in enough detail was, because the UK is a predominantly services-based economy, that those sorts of skills, accountancy skills, project management skills, but ultimately we are still finding that it's a law that still holds true. So by diversifying away from the EU, the idea had been to find growth in other areas, but gravity is an inverse square law and there's no escaping gravity, so I suspect there's no escaping trade. Another is improving the regulatory environment for companies. Now, I think we should be really clear, lots of the clowns on Tufton Street, lots of the Liz Truss people again, not a political video so far, will say that means cutting regulation, cutting taxes, dump turds in the water, let businesses do whatever, all that sort of thing. But I think it's actually a bit more nuanced than that. But the overall idea that the CBI had put forward was basically creating an environment where it's easy to set up a company, it's easy to hire people into that company, and creating an environment where people want to invest in the UK. You know, as we've seen and as we've talked about in the previous video, investment in the UK has basically gone absolutely bloody nowhere since the financial crisis, and has got even worse post-Brexit. Addressing inequality. Again, one of the things we talked about in the last video is that the UK is highly economically unequal, but highly regionally unequal as well. And this leads you to kind of a few key problems. The first is that you just don't have this large base to be able to sell British products to British people about. And I think there's plenty you could do there ultimately. You could expand the minimum wage, you can offer greater tax breaks, you can offer basically an expanded social safety net to those who are on the lower income scale. And much like with some of the previous points, it just raises that floor for people, puts more money in their pocket, which they're more likely to spend. And on the topic of investment, the National Infrastructure Commission has recommended that the UK needs to spend about £200 billion per year just to keep up with a lot of our other competitors. Now, a lot of this comes from the fact that the UK has cut back on a lot of its capital investment projects in a bid to reduce overall debt, which didn't go that well. And that's ultimately how we've ended up with this situation with the racks in schools. And this will be a really key aspect of ultimately driving down regional inequality, but also driving growth. Again, you get those short-term jobs, but you get the long-term boost to the economy. Supporting R&D. Again, the UK historically has not done very well here, so providing all sorts of tax breaks for private investors when it comes to R&D, green technology, machine learning, AI, all of those hot button topics, but also just having the government spend a shitload more money on R&D is going to be really beneficial. Again, it's another one of those high return but over a longer time horizon, which can make it kind of politically unpopular. Reform taxation. The UK has some highly unequal taxes. A good example is something like council tax. Because council tax is capped, you basically find that the proportion of someone's house value can be much higher in some of the wealthiest parts of London when compared to some of the poorest parts of the UK. So it's quite a regressive tax system. And I think it's also fair to say that wealth is not that fairly taxed in the UK. We see story after story of some of the ultra wealthy being able to relocate themselves to other lower tax jurisdictions in order to avoid income tax, capital gains tax, inheritance tax, all those sorts of things. So by prioritising effective tax collection, we're also in a situation where it puts more money in the government's pockets to be able to plan a lot of this spending that we're talking about. Thanks very much for watching. Make sure you watch this next video where we're going to be talking about how Brexit has ultimately fucked the UK economy. Thanks for listening. Peace.